Meantime, the Federal Reserve kicks off its two-day policy meeting today, where it is expected to keep rates unchanged. Joining us now, Kathy Bostjanich, the director of U.S. Macro Investor Services at Oxford Economics, and Jeffrey Rosenberg, senior portfolio manager of systematic fixed income at BlackRock. Kathy and Jeffrey, great to speak with you. Kathy, what are you expecting? There's a lot of talk that perhaps the Fed will introduce or start to walk towards more telegraphed targeting messages, such as yield curve control, inflation targeting, et cetera. What do you make of that?
Well, I think that the Fed may actually wait until the fall to do anything very meaningful, but they may take a little bit of a half step towards inflation targeting. And they can do that by adjusting their forward guidance. They could indicate that maybe they won't be, we certainly know they're in no hurry to raise rates. We don't think that happens in the middle of 2024, actually. But they could indicate that they won't lift off from the zero lower bound until inflation is at 2% or even higher. The other thing is they could indicate that current quantitative easing is aimed not just at sustaining market stability, but also to provide additional stimulus to the economy.
Yeah. Jeffrey, what are you expecting? I mean, the timing of the Fed meeting is interesting in that the stimulus package in Congress is continued to be hammered out as we speak, hopefully, and the Fed meeting happens before that. And they've been very vocal in saying they can't do it alone, that they need the fiscal side of things to come through. So they might be on hold, but do you think that they'll do some more jawboning here?
That's a really good point, Melissa, and I think it highlights that for this meeting, at least, the focus of policy is really squarely down the street in Washington, not really on the Fed, but much more on the competing proposals for the next round of coronavirus. I think you'll hear from the Fed what we've heard before, continued policy support. As Kathy said, not a major change here, maybe a hint in terms of, again, a nod towards a future movement towards average inflation targeting, maybe something in terms of developing on forward guidance. But I think all those major policy changes that we're focused on from the Fed are still yet to come. They'll be deliberated in this meeting, but we're not going to know that until we get the minutes later. So I think the focus of the market is going to pass by the Fed meeting and really stay focused on the fiscal policy issues that you highlight.
Yeah, Kathy, given all that's going on in Washington, we've seen the 10-year yield hit its lowest weekly close ever on Friday. And so I'm wondering where you think the 10-year will go and what that yield curve could look like.
Well, interest rates continue to go lower and lower here in this environment. And I think what you're seeing is both kind of a secular trend where interest rates are going to stay low for a very long period of time, but also concerns that the economy is stalling here, maybe even reversing gears. And the idea that, as Jeffrey said, the Fed's not going to do anything dramatic now. There's some speculation of yield curve control being adopted, but that would be something later that happens. But just the fact that that could happen also helps to put some downward pressure on interest rates. So, we're not looking for any large, increase going forward. In fact, we think it's going to be a very gradual, any interest rate increase will be very gradual and slow going forward.